Hey, it's Mark Ferguson with Investor More, and we're back with another real estate investing video. And today I'm going to talk about rental rates and if they are actually increasing or decreasing. There have been some people saying the rental rates are crashing in the US, but those same people kind of say everything's crashing all the time. So we'll talk about if that's really the case, what's happening with rents, and what might happen in the future with rents with high inflation, higher rates, and what has happened in the past when that has happened as well. Now, of course, I love seeing the likes, comments, shares, keep those coming. Love seeing new subscribers as well. I have lots of different videos on our flips, rentals, businesses, and advice videos like this as well, if you are new to the channel. All right, so the thing that caught my eye about this was another YouTuber who said rents were crashing. We'll talk about that just in a little bit here. But I want to do some research first and see if that was true, because I have not experienced that personally. I have quite a few rentals, single family, commercial, multifamily, and I've also looked at my local rental market here in northern Colorado, and rents have just been exploding up here. It's been crazy. So I wanted to see what other cities look like, what national trends look like, to see if it was just an anomaly where I'm at or if it was a national trend. So one article that caught my eye was U.S. rents finally showing signs of a cool down. And asking rents fell to 7.1%, down from 8.4%. And I think that's the year-over-year change in rental prices. So that's important to know. Articles can be so misleading now. It's kind of crazy. But what they're talking about, if we zoom down here, prices for the first time in 20 months, asking rental prices saw negative growth, falling 0.1% from July to August. So technically, I guess rents fell 0.1%, but then it is important to know about seasonality, and usually in the fall rents go down, just like real estate prices also tend to go down in the fall every year as well, just because of the seasonality and when people buy, sell, move, all of that. But what's also interesting about this article, rent prices climbed during the first half of 2022, hitting a national average of $24.95. That's crazy. That is so expensive. But as a landlord, for us to buy properties for $400,000, you kind of have to charge that much for it to make any sense to buy a rental. And we're going to show you the number of rentals and stuff too, which might surprise you here in a little bit, and why rents might be skyrocketing so much. But then we scroll down here to this sentence, which I think is very important as well. While rental prices are still rising year over year, the pace of growth is slowing. Asking rents fell to 7.1% in August. And again, they're not real clear. I believe that's the growth. They went up 7.1% year over year, whereas in July they went up 8.4%. So they're still going up. They're just not going up quite as fast. So they aren't really crashing, but they're not going up as crazy fast as they were before. Now, this YouTube channel is the one that likes to be a little dramatic about the real estate market. Has been predicting a crash for a long time, but I saw this pop up on my feed. The rental market is taking a dive right now. Check out this rental listing in Dallas-Fort Worth. Rental price cut from $2,600 to $2,000 over 2 months. Still no takes. But here's the best part. Look at the neighborhood this listing is in. Rental inventory everywhere. Read into the comments for more. And then it shows this rental listing going from $2,500 in 5 days to $24, in 2 days to $23, in 5 days to $22, in 2 days to $2,100. And this kind of stuff really bothers me, because you basically took one listing without knowing anything about it, not knowing neighborhood rental rates, not knowing the neighborhood, not knowing the house, and saying because they dropped their price, that means the rental market is crashing everywhere. That might not be the case, but it can convince people that's the case, and then they get the wrong information and don't know what's really going on in the market. In the comment, he's talking about this is a nightmare for corporate investors, because with spiking interest rates, they were already losing money or barely breaking even on these rentals after paying their warehouse lender. But now rents are going down and vacancies going up while interest rates are going up. That's a major problem. Capital margin calls for these corporate investors are coming. It won't be pretty. P.S. Markets where rents are starting to trend down include Dallas, Austin, Phoenix, Vegas, and Florida. And I'm not sure if he means by trending down, meaning the rate of increase is decreasing, like we said before, because they aren't going down. They're maybe not going up as fast. And here's some other things I want to talk about with this, including, are rental vacancies really going up? All right, here is Fred St. Louis Fed data. I love this site. Sometimes it's a little slow getting updated data, but this one is pretty recent. This is the rental vacancy rate in the United States. And you can see it goes back all the way to 1956, which is really cool. 5.3 up to 9%. We saw a drastic decrease in rental vacancy rates in the 60s. Pretty steady in the 70s, pretty low. Then they started rising in the mid 80s and kind of kept rising all the way up to kind of the real estate crash. And then once the real estate crash hit, we actually saw rental vacancies decrease. So what's interesting about that is kind of while the real estate housing market was crashing, the rental vacancy rates were also decreasing significantly. And what you will see here in the 70s was we had really high inflation, really high interest rates. And when this vacancy rate started increasing was when rates started going down. The market kind of stabilized. And then when rates really increased, the vacancies getting higher, is when everybody started buying houses in the early 2000s. Crazy lending guidelines. Subprime loans were out there for everybody. I think 30% of loans had negative amortization or interest-only payments. It was crazy. And you saw, since everybody was buying houses, not as many people were renting. So you saw big increases in vacancies. And then when people were losing their houses, the owner occupancy rates were going down, rentals decreased. So it's kind of like, owner occupants go up, rental vacancies go up as well. There's less renters. So, but the important thing here is Q2 2022, and maybe things have changed in Q3, but vacancies are very, very low. Some of the lowest they have been since 1984, 85 maybe. And that's when interest rates were really, really high. And is that a coincidence? Is that correlation without causation? Not sure, but some of the lowest vacancy rates we've ever had were when we had some of the highest interest rates. And now, again, with very high interest rates, we're also having low vacancy rates. So a few things to look at here, but let's take a peek at what rates have been doing, or rental rates, the last few years. Okay, so it's kind of hard to find the data on rent prices. Fred doesn't have the most amazing ones. They have a consumer price index for rentals, but it doesn't really tell us prices. But there is Realtor.com data, which gives us some data. This was posted 13 days ago, so very recent. Some of this you'll see isn't quite as recent. And you can see here there is a tiny pullback. So the red line is the actual median rent. So if you look to the right, it goes from, what is that, 1,400 up to 1,771 up here at the peak. And then it says, or no, 1,781, it dropped $10 to 1,771 in August. So that's kind of the first month we've seen a decline. But you can see the crazy increase we've had recently. And this blue line is the change. So that's how much it changed year over year. So it's still, and you take this line and you compare it to the left over here. So it still went up 10% year over year, but it didn't go up 17% year over year like it had before. Just insane price increases. So rents have slightly decreased the last month. But again, if we read some of this about this, it is the first time we've seen rents decline since last November, perhaps a sign that more typical seasonal cooling is returning to the rental market like we've seen in recent for sale data. So is it decreasing? Is it going to decrease? Or is it just a seasonality that usually happens? Here you can see kind of the normal curve. We showed this before in other videos of sales prices. They normally go up and down. They don't just always go up or always go down. And the last 2 years have been crazy with just nonstop going up. But now maybe we're returning to more of a regular rent trend. All right, so why do rents keep going up? A lot of us keep hearing that investors are buying all the properties. They're turning everybody into a renter. Corporations are buying up all the rental properties. There aren't enough houses for owner occupants. Well, if we look at typical supply and demand, the more supply you have, the lower prices you should have. There's more supply, more properties for people who want to buy them. If there's less supply, prices go up. So if there's more supply and everybody's buying all the rentals, how are the prices going up? Because there should be more supply. Well, if we look at the actual data, there is not more supply. This is, again, St. Louis Fred, and this blue line right here is housing inventory estimate owner-occupant housing units in the United States. This is owner-occupants who own their house. Now, the red line here, housing inventory estimate renter-occupied housing units in the United States, right there. And we'll talk about this green line in a second. But we can see here, get out of here, lines. There we go. I won't move my mouse over there again. You can see the trends. They're both kind of going up in the early 2000s. Then the housing crash comes along, and the owner-occupant units really start to flatten out, maybe even decrease some. And rental units keep going up till about right here in, oh, whoops, sorry. They keep going up to about right here in 2016. They reach a peak of 44 million rental property units. And the owner-occupant units kind of hit their bottom of 74, along this whole route, 74 million. But the whole thing is population's increasing this whole time. So both of these lines technically should be going up as the population goes up too. So if they are going down, that means there's many more people becoming renters. If the owner-occupants are going down, renters should be going up, and they both should be going up. And so what happened in 2016, despite what you hear, look at the rental units, 44 million, 43, 43, 43, 43. COVID hit, the crazy COVID bump, it drops down to 41. I don't really take that into account. I just kind of ignore those. But again, 43, 44, 44, back down to 43. Rental units since 2016, there are less rental units now than 2016, all while the population's been increasing. So rental units aren't increasing. There isn't a massive supply. There's actually a lack of supply of rental units. And housing has gone from 74 million owner-occupant units to, again, we'll ignore that crazy jump, 84 million. They've had an increase of 10 million owner-occupant units, while there's been a decrease of, or a slight, maybe steady number of rental units. So pretty much all of the gain in population and housing units has been going to owner-occupants, and there aren't as many rentals. And if there aren't as many rentals, then that typically means prices will go up. And that's what we're seeing in my market. We've seen that for a long time. Just aren't enough rentals and prices are skyrocketing. And this bottom line, you might wonder what that's for. This is the vacant housing unit in the United States. So another thing you may hear all the time is, oh, there's 16 million vacant houses. There's so many houses for everybody. Investors are just hoarding these houses and keeping them. Well, in reality, vacant houses peaked to about 19 million there in 2009, and then they've slowly been dropping all the way down to 15 million now. We've lost 4 million vacant houses compared to the peak. There aren't more vacant houses than before. There's actually less. And so a lot of those vacant houses might be being fixed up, made into rental units or owner-occupied units. And from this, it kind of seems like they're all being made into owner-occupant units. I'm doing my best to make some into rental units. If you see through my channel, we've created some housing the last couple of years with properties we've fixed up and returned to the market, either through flips or rentals. But it isn't like all these rentals are just, or the rental units are staying steady because people aren't choosing to rent and there's all these vacant rentals. The vacancies are down for rentals and the actual vacant properties are down, all while owner occupants are up. And that just means there's really not enough rentals for people out there, and that's why we keep seeing rental rates go up. So what does this all mean for the future? Well, like I say in most of my videos, I can't predict what will happen in the future. I can give some estimates, look at history and say, hey, that happened before, maybe that happens again. But in my opinion, if we go back to this rental vacancy history in the United States, we saw high rental vacancies before when we had very strong owner-occupant markets. We actually have a very high owner-occupancy market right now, and we have low rental vacancies. So the current trends have actually kind of gone against the previous trends where, you know, we saw very low rental vacancies when the real estate markets, you know, didn't have a lot of owner-occupants. Interest rates were super high. We have high interest rates now, so it's just so many different variables going on. It's really hard to know what will happen. But the trend has definitely been for rental vacancy rates to go down. And even when we had these crazy high vacancy rates of 10% back during the housing crash, it wasn't like we saw a massive decrease in prices. So we can look at rents historically, although it's very hard to find this data as well because I don't know, rents are hard to discover. And I don't know why the prices are so low here as well. Oh, did they adjust? No, that would be adjusted for inflation. But this, we're looking at the trends here to see what happened all the way back to 1940. And the whole point here is that this entire time, we never really saw a rental crash. We never really saw rental rates go down. So even with the real estate market crash, rents went down in some local areas. Some areas got hit very hard. But nationally, rents never really went down. They've always been pretty steadily rising. And so it's hard to say that rents are going to crash or go down when historically they've never done that, even during the worst housing crash in the history of the US, except in maybe some local markets we may see some crazy things, but that could happen at any time. And even with the rental vacancies going up and down and up and down, it certainly got harder to rent properties. It certainly took more time, but it wasn't like rents dropped significantly like prices did. They just kind of stayed steady. Maybe they dropped it just a tiny bit in most markets. Like I said, there's a few markets where they really crashed, but for the most part, they stayed steady. And with rental vacancies so low right now, it's really hard to think that they will just drop down and tank. And actually, when you see rental vacancies real low like this, and we go back to median, rent prices over time, you can see some of the steepest curves right there and biggest increases were during that time period. You went from 50% increase in 5 years, another more than 50% increase in 5 years, big increases in the 70s. Things kind of leveled out a little bit. I don't know if this chart is quite accurate with its line, because if you look at this growth, it was way higher here, percentage-wise, than up here, but it shows a very high peak. And then things really leveled out, and now we're starting to see that big increase again. So while people think rents have increased a lot lately, it's much more similar to 1970s to the 2000s with rent increases than it has been recently. We really haven't seen the rent increases that high compared to historically. So as you can see, there's so many variables, so many things going on with rents, and I'm kind of all over the place looking at these charts and data, and there's really no clear thing of this is exactly what's going to happen. And that's pretty much how real estate is all the time. And I think when people say, oh my gosh, this has to happen, or it's guaranteed this is going to happen, be very careful, because almost no one knows exactly what's going to happen. We can make our best guesses. We can look at the data, look at the past, look at things now, and make guesstimates, but we just don't know. But based on what I see, and historically, when we have high inflation, when we have high interest rates, rents keep going up, and they actually increase more during those times than other times. Now, there's no guarantee that'll happen again, but I don't see them tanking based on the low vacancies, based on the small amount of rentals we have compared to the population that keeps growing. And then with high interest rates in houses, that might deter some people from buying right now, which would in turn make them renters. And if there's more renters entering the market and fewer rentals, then that might indicate rental prices will keep going up. So it's really hard to say. I don't think there's a crash. I don't think rental prices are crashing by any means. In my market, they keep going up, and it's very hard to find a rental. I think it's that way in most markets as well. And it's not just residential either. I've seen it on my commercial properties as well, or multifamily properties. People are looking for places to rent. And if interest rates keep going higher and inflation keeps going up, that might just keep driving prices even higher, which is what inflation usually does, is it makes things cost more. Now, if interest rates go down, if inflation decreases, then that will probably help the housing market and have more sales and could increase housing prices again. But if housing prices increase, that doesn't necessarily mean rents will go down. Sometimes rents have to go up with that as well. And that's why historically, we've kind of always seen rents go up. You don't really see a big downturn in rent. So we'll see what happens. I don't see a crash coming in rents or housing prices. It'll be interesting to see what happens this next year, what the Fed does, and how all that works out. All right, thanks for watching. Hopefully this is a helpful, informational video for you. Love the likes, love the comments, love the shares. Keep those coming. And I'll be back with more videos on our rentals, flips, businesses, and advice videos and analysis videos as well.